Hello, hello, hello. Welcome back to another trade recap. Today is Wednesday, April 16th. And, well, it was a beautiful read, a beautiful trade. And if you saw my posts on X or anywhere else, yeah, I had a loser on a winning trade. I lost on a winner. Those are the ones that they're not fun at all. Like, they're not good, right? Like, nobody wants to lose on a winning trade. You called it out correctly. Everything was good. Everything looked great. And I'll explain why I lost. And it was user error. Maybe not even user error, human error. Because we are human at the end of the day, right? We can do everything in our power, everything we want to try to be as robotic as possible, to try to take as much emotion out of trading as you can. Like, I believe those are things we should strive to do, but because we are human, you'll never fully be able to do that, in my opinion. I don't think you'll ever fully, unless if you are doing some type of full auto bot where you walk away from it and don't even touch it, which, whatever. So I'll explain why. I'll explain why here in a little bit whenever we get to my trading chart. But let's start here on the daily chart. You know, I always like to start with a top-bottom approach. Yesterday on my trader view, this is where I was talking about. Right here, we had 2 points, right, that I was talking about, that I wanted to see what price does. Right here, this volume imbalance. Then, of course, we have this big volume imbalance here. But not only that, we have these relatively equal highs right here on the daily chart. So what I mentioned yesterday is I want to see what price does, because we closed up here, right? Like, we closed right up here above this volume imbalance. So I mentioned yesterday what I really wanted to see was from here, do we make our way up and take this right here? Or do we do something, anything, manipulate up or whatever, and reach inside this volume imbalance, and from there, do we continue down? So this area right here was a key point for me. We're either going to do this, right, where we come down, or we're going to trade in here maybe a little bit and do this, where we take this area. That's what I was looking to see what would happen there. And obviously, you can see we gapped down, first of all, right, from this close right here to the open. You can see that gap right there, which created also a volume imbalance at the end of this day when it closed, right? So we gapped down, and then we did go up, manipulate up. So you're always going to have the manipulation. You're always going to have it go up first if it's going to go short. And then distributed down. And what do we have here? Like, we have these pretty much relatively equal lows now right here. And I did mention this yesterday, is that if we did do this, I believe we're going to come down here, right? I'd be looking at this low, these two lows right here. Until price gives me a reason otherwise, this now is what I'm looking at right in here, this area. All right. So, but also what could happen is, we have this volume imbalance. We could trade up to this new volume imbalance right here that we just created with today's close. We could always manipulate up and then come down. So we'll still see what's going to happen, but this is still pretty suspect to me up here. So we'll wait and see. You know, we got to wait and see. And this is where you really start relying on your lower time frames, because if you haven't been around me much or was on any of my live streams, what I really talk about is two bias. Really, I have an overall bias of what the market's doing, and then I have my trade bias. And like I mentioned yesterday, my trade bias can involve me trading with manipulation on a pullback to internal range liquidity or something, or it could be waiting until we have a pullback and then continue with my overall bias. So just because my overall bias, my long-term bias is short on something, doesn't mean I can't take longs. So that's what I'm looking at. So if I don't have a clear, very clear perspective on the longer term bias, then I do have to rely more on my short term and just watch for these key levels on the higher time frames. So I don't think there was much for me on the 1 hour chart this morning. Oh, actually, yeah, we did have all these lows down here. All these lows right here. So I had this marked as my sell side liquidity right here. All these lows, relatively equal lows. And you see, we did shoot up in the London session into here. So if you take this right there, came right up into this 1 hour fair value gap, dropped, inverted, you created an inversion right here. Then we ran up through these little highs and displaced down through the day. But I had this area of smoothness here as my sell side liquidity. And I pretty much had, let's see, where did I have? I think I got it from my 15-minute chart. But I had a buy side liquidity somewhere in here as well. But I think I pulled that one from my 15-minute chart. And then I had this one marked up here as well. All right, so let's jump down to the 15-minute. Yeah. So the 15-minute chart, I had this as a sell side liquidity. Obviously, we had this gap up here, right? And then I was looking at this high right here, these equal highs, as a buy side liquidity. Right there. So now, here's 9:45. So now I'm waiting because the overall bias, like I said, I am more short now because we came down through that volume imbalance that I mentioned. But we know it could manipulate up. And in my opinion, we would manipulate up before really distributing down. So I have this sell side and I have this minor buy side basically. And if you look, this big bar here could be an order block. And actually, I would mark this as an order block. I didn't mark this while I was trading, but I'm just pointing it out now because see, look, here's the midpoint of that bar because this bar took all these highs and into this fair value gap here, volume imbalance, and then came back down and ultimately closed down. And once it reached the midpoint right here, look how it tapped it right there. And then again, took these lows with, what do you have? This fair value gap right here. Price went up into it. And then we had displacement down in the afternoon, right? So, but that was later. So before then, what I'm looking at is, here's the open. I'm looking to see if we run, which one. I actually preferred to run up buy side first and then go down. But first we had the morning right through this sell side here. Didn't quite completely clear because it did make relatively equal lows right here and right here. Then came up and took this buy side up here, right? Took this buy side and then ultimately came down and went further. So that's what I was looking at. And let's go ahead and hop into my trading chart here. Okay, here's my trading chart. Now, I don't know. Oh, wait. There we go. My executions went away, and this is the kind of day I was having. All right. So I told you I got a loss on a winner. My executions are not showing here. And on top of that, my video, because I always record my trades, my video lasted, it was like 20 seconds long. I don't even know what happened in my video. So I don't even have a video for you. But I do have screenshots with my executions and my P&L. I've already posted on X, but that way you know that I'm not, I like to be transparent and show you my wins and losses and show you what happened. So, all right, so we're going to go here. This was the open back here, right? Here's that 15-minute gap fair value gap that I mentioned. Okay, you can see my buy side liquidity up here. And then I had sell side liquidity down here. It's kind of a little jumbled up. You kind of can't really see it, but it's right here underneath. Well, this orange line here is the London low as well. So that's why you can't see it. But because that's overlapping the London low with what I had on the sell side. So we made this little run up right into this 15-minute fair value gap. So what is that? Well, internal range liquidity. Remember, it doesn't always have to go all the way up to buy side, to this, trade evade, what are you doing? To this buy side liquidity first. Like, I don't need price to go all the way up here and then come all the way down here, especially if I was more short biased for the day, right? I just needed to go up into an internal range liquidity. Remember, price is always seeking external range liquidity, internal range liquidity, and that could be in the form of relatively equal highs inside the range or an imbalance in efficiency. So here we had a SIBI, right? So we came up into this 15-minute SIBI, which is just a bearish fair value gap. We came up into it, hit the midpoint, pulled back here. Do you see any fair value gap? No. Pulled back here. Any fair value gap? Little bitty one there. And then we had this drop here, which gave us the first presented fair value gap. Pull up right here. Could have been a really nice short. That was at 949. And like I said, I was more short biased. So this was an entry that I would have loved to have taken. So pulled up right into internal range liquidity. Had a market structure shift. First presented fair value gap. And then ran all the way down to sell side liquidity. So just looking at that, if you entered here, got out the sell side liquidity, we're talking about 95 points right there. It's a nice trade. Very little heat, right? Depending on where you got in, or when you got in, 617, less than 20 points, depending on when you got in this. All right. So anyways, I didn't take that, but we hit this sell side liquidity here, which then actually also created a rejection block here. So what's a rejection block? You see this lowest point, lowest body right here. Then it has this long wick, right? Then you have the next candle up, came up, right? Had another wick that could not go below the middle of this wick. This is a rejection block, all right? And then you can see the rest of them stayed right here within the open of this candle. So I'm already looking at that as, ooh, okay, that could be a signal. This is as low as it's going to go because we have that sell side liquidity. We have that London low. Now we have what looks to be like a rejection block happening right here. Okay, looks good. So then what did we do? We displaced up. I was looking at, we have a little swing right here, right? We have a little swing right here, but I was really looking at this swing right here where I put this right here. Okay, I was really looking at that point that I really preferred price to go up through that high and then pull back. So it did that. But if you look at this bar right here as well, you see these little lows? And then we had this last candle down here as well. And then we displaced up. This is going to be a bullish order block as well, right here. So I measure the midpoint and the open of it. All right. So now I have a rejection block, an order block. But then what do you have here? This yellow. Well, that is actually going to be an inversion. Okay. Why? We have a fair value gap here, and it's actually a double. 2 1 minute fair value gaps right here, doubling. So I combine them, and then it traded right through it, closed through the other side of it. So that's going to be an inversion. And then we have this fair value gap right here. Beautiful. And we took this swing. Beautiful. So now I have a rejection block, order block, inversion, and a fair value gap. This is what I like to call an A plus. Ugh, that's kind of ugly. An A plus setup right here for me. Okay, I'm getting carried away. But that's what I like to say is an A plus setup. It's beautiful. It's beautiful. However, we came back down into this area. Now, what happened was my entry was right here at this 1 minute fair value gap. I was fully expecting price could trade back, because I always expect that on all my trades, back down to this area. So my stop, I wanted it to be right here, underneath this rejection block, underneath this wick, right there. That's where I needed my stop to be. Actually, hold on a second. Let's do this. I'm still getting used to this program right here. This is where I needed my stop to be. Okay. But if you look at it, right there was my entry. Hold on. Right here when we hit this fair value gap, right? So, okay, it's not doing it right. There we go. About right there. And if I measure right down to here where I wanted my stop, underneath that wick, right in here, look how many points that is. That's just about, it's 38.75 points. I like my stop when I go with my full contract, my normal size contracts. I like my stop to be around 30 points or less. If I'm really, really, really confident in the setup, I'll go up to around 35 points. But my mistake, my human error was I did not look at this correctly on how big my stop was going to be. I don't know why. I don't know what I was thinking. I have no explanation. I didn't realize my stop was going to be basically 40 points. Had I realized that, I would have dropped my contract sizing by a little bit. And then what I would have done is put my stop where I needed my stop to go. Because I targeted the first presented fair value gap right up here. That was my target. That was a low-hanging fruit. And actually, if you measure this dealing range, let's see. Where did I measure from? Right here. This high. This low. Look where equilibrium is. Right there at that first presented fair value gap. So I was like, this is just all lining up to be extremely beautiful. So because of that, I didn't lower my contract size. So I was already in the trade and I said, crap. And when I was looking, because obviously I got to place my stop in there quick, right? I was looking, I was like, that's a 40 plus point stop. Oh my God. Like, I can't put my stop that low. I'm risking way too much. So the next best place I put it was about right here. It was right here. It was right under, pretty much under this wick, because it was a little bit under this inversion, but it was like right in this area. Look where price went and tapped. Man, tapped me out and went straight up to my target. So Yeah, I mean, I didn't lose as much. I lost, but had I had my target, I'm sorry, my stop right here where I wanted it, price never came there. Because whenever I enter a trade and I'm taking these trades, I always enter with the expectation that price could trade against me anywhere between my entry and my stop. That's why I put my stop there, because if it hits my stop, I want out. But I'm okay with it trading anywhere in that area because that's what these trades can do, right? The best ones, of course, they just come down, into this area around your entry and they just take off. But they're not always like that. So you have to be okay with that and you have to expect that. You have to know if my entry is right here, I know my stop needs to be under here at a minimum. So if I know that, I have my stop there for a reason. I'm 100% okay with price doing this or even this. Anything in here, I'm okay with. Because if I'm reading it right, it's okay if it does that, and then it should go. And if it doesn't, it hits my stop, you're not always right. So that's why I have a stop. Because if it hits it, then I went out. That means I was wrong. And I'm accepting that because I use money management and I have it properly set to expect that, right? But because I made the mistake, not calculating right, not sizing down, I immediately said I can't risk that much. Which in hindsight, I could have just put my stop there and let it go. But then those are the times that it wouldn't work. It would actually come down and hit my stop and make me lose more, and then I'm even more mad. So it is what it is, right? What I have to hang my hat on is, yes, that happened, whatever. But what I have to hang my hat on, and if this ever happens, stuff like this happens to you or, y'all watching this, you have to look at it and say, just scratch the trade. Forget it. It is what it is. It happened, right? But I got it right, though. Even though my trade lost, I got it right. It hit my target, right? It got in my entry. My normal stop where it was, it never hit. Like my analysis in my trade, the trade worked. It's just me. So you got to hang your hat on that. You got to, because if you sit here and keep dwelling on, I lost. That sucks. Woulda, coulda, shoulda. If I would have just went ahead and risked more and put it there. Forget it. Who cares? I'm happy that, guess what? It was another winning trade. I lost, but it was a winning trade. And that's how you have to do it. That's the mentality you have to have, right? Because it's too easy to get into your own head. I did that for too many years, and I said, you know what? Enough's enough. I'm sick and tired of being sick and tired. That's it. So let's bring this over so you can see. I'm not lying, y'all. Here's my trade. See, here's my entry. It was 63, so like right above here is about where I got in. And then you can see, look at it. Tagged me out 537.50. It's like right here. Basically tagged me. And it took off. And you can see, like, when you break it down, it's $260 to $350 per account. I just requested a payout last night, 15 grand. And guess what? Even after all those, because I only take out, like I trade small, I take out $1,000 per account. I don't take out the max. I keep building, keep trading, right? Did that, made that request. And guess what? Even with this loss, those accounts are still above that amount needed to trade. And actually, I was going to take out 16 grand, but one account still needed $50 because I had 4 days of $50 profits. Because I had a couple, I had a win and a loss and a win and a loss, whatever, with my 8 trading days. So I needed one more $50 or more win, which obviously my trades are more than $50 wins. But I finally got my accounts on the same schedule. I know I've been trying to do that, and I finally did it. So except for that one now that I couldn't request, I didn't realize it was still without 5 days of $50. So Couldn't request that one. But anyways, these are there. These are all the same accounts. You'll always see I have the same PA numbers. Well, and actually these are back from March. So I've been getting paid pretty consistently. I'll say that. All right. So anyways, I just wanted to show that, and also want to, I always want to encourage everybody, right? I was never doing it. I'm in my 5th year of trading. My first 3.5 years were not consistent. They were terrible. They were me blowing evals, right? I never blew a ton of, luckily in my case, I was so focused on trying to trade the right way and not blow accounts that I spent all my time blowing accounts. It was on evals. It wasn't on funded accounts. But yeah, it is what that is. So anyways, that's my trade recap today. I have some more content that I'm getting ready to put out. That way it's not just full of these trade recaps. It's more useful content, discipline, money management, stuff like that. Stuff that I love talking about because, like, as you know, that's my favorite topic because I believe that's most people's problems. The reason why most people don't make it, and the reason why I almost didn't make it. I quit many times. I even had a 1 month quit, like 2 years in. So, that's why it's good. You got to shut out the noise. You got to focus. But it is good to have an accountability partner. I don't know why I said that. An accountability partner. That way, there will be, or even a mentor. There will be times you want to quit. And you got to have that person in your corner to encourage you, to remind you where you come from, and where you can go. Always remind yourself that, and always have your why. If you haven't seen my video about knowing your why, go watch that video. You need to have something deeper than just yourself or Lambo. Anyways, all right, that's all for today. That's my trade recap. I hope you all have a wonderful, wonderful day, evening, or whenever you're watching this. And I'll see you all soon again. And as always, trade well, everybody. Take care.